Hi Bhavish, thanks for joining me on my new episode of Venture Unlocked, and it's pleasure to invite you. So for my audience, first I want to introduce you. Bhavish is general partner at Modulor Capital, and he has years of experience in this, and he also served with different firms. So Bhavish, can you just introduce yourself on that side?
Yes, thank you, Shubham. Thank you for inviting me today. So I've been investing for about 8 years now, and
Okay.
prior to this, I was doing advisory work at Gartner with their software practice. And before that, like everybody else, I did a couple of operating roles across a range of functions with both product and IT services companies. So totally, I've spent about 27 years in the trade now. It's been
Okay.
a long time.
Okay, that sounds great. So I think you are one of the eldest guests in my podcast. So I'm looking to gain lots of knowledge for me and for my audience also. So we will get some good understanding about the investment and the software side, how India is doing on that side, and what was the new trend going on. So
Yes.
Bhavish, can we start with something about Modular Capital? So you can just introduce about what Modular Capital do and what was the sector in that you are investing, which stage you are investing. So we can start with that.
Yeah. So I think typically we do pre-seed and seed.
Okay.
And the way I differentiate between them is not like how the US market differentiates. But to me, a pre-seed round is there's no software which has been built. Seed
Okay.
round, product has been built, and now you need money to scale. If you're raising a pre-seed round, it means you have a concept and you're trying to raise money for both the concept and for marketing.
Okay.
Okay, that's my
Okay.
definition, at least on the software side. The reason
Okay.
for that is because India में ना क्या होता है कि you tend to get money for both the things combined.
Exactly.
The way it happens in the US is that, or even in Europe for that matter, is that you raise a pre-seed round where you're only expected to know the product
Okay.
and build out the product, and then you raise a seed round to say, "Hey, I built this, and we think this is the time, this is what we will be doing, this is where we think the market is," and then they say, "Okay, chalo, let's do give you money to scale." But India, where you tend to, my observation is seed and pre-seed are usually combined because there is no handoff available here. At least that is my observation.
Yeah,
So
exactly.
we're
Just because,
doing pre-seed and seed.
yeah. So like as I also see some of the trends like when someone starts, they start with some friends and family, and when they want to build a MVP at some stage or they want to go towards the audience side, definitely they are going for pre-seed and the seed round together, and then they are raising for your pre-series.
Yeah, doing that. And so modular actually, so we have a modular has a RIA license from SEBI,
Okay.
and what that allows us to do is, maybe with the exception of insurance, allows us to advise on a range of assets. So my partner Sanjeet, he looks at public markets and he does wealth, and I do all the private assets. That's how the work between the two partners is.
So you have two partners only, and apart from that, like, how you screen the deal and all that thing, how's it going on in your side?
So if you look at, I mean, the pipeline to invest is not different from how sales as a function works in
Yeah,
any organization. It's
agreed.
very similar, and because of that, and there is a range. So you get referrals from other micro VCs like us. You have investments bank regularly showcasing deals. You have incubators who have incubated companies showing us deals, right? So tends to be that. So we have more of an inbound process because it's a small team. One thing we have not been able to do very successfully is to build an outbound function. Like larger
Okay,
funds, they almost have salespeople who are always looking at new incorporations and that kind of stuff.
got it.
So we tend to focus on lot of inbound screening, and we tend to focus a lot of, or maybe have dependence on a lot of reference for
Okay,
that matter.
okay.
Yeah.
And like just I want to know about your investment thesis. Like what is this? What is that about?
So typically, we write 100K checks, and like I said, if you and we've been so we had a US based fund structure earlier, and we were
Okay,
bringing for the first fund. I think we deployed maybe 10 or 12 crores directly through US, bringing in money through FDI.
okay,
The second thing we did was then we had more LPs, so we tend to then and these LPs were geographically spread. So now what we do is we tend to use we've done more deals using fund as a service. So you have FAS available
okay,
by various players in the markets. One I know, Let's Venture does it, AngelList does it, Sony Kant does it. So we did a couple of deals there. So now we have both a fund as well as a syndicate combined. thesis. We've deployed, I think, roughly about 12 or 13 crores. I don't know the exact number, but we've deployed these. And typically, we are known in the market for doing about 100K checks. So we've done, I think most of our deals are in the 50 to 75 lakh range. Either it's a 50 lakh check or it's a 75 lakh check.
Okay,
And we do, because of a low fund size, we don't have the ability to write pro rata checks also.
got it.
So we will do one round, and then, we typically introduce them to angel syndicates who can execute pro rata on our behalf, or find them other people who are willing to bring in money and pre-series A.
Got it. Got it. So like it's been 5 months of to 2020. So how this year is going, and like
It's
where you
been,
see the trend is going on.
yeah. So last year was very bad. We had
Okay.
a lot of term sheets out, but we didn't get any acceptance for
Okay.
various reasons. But this year has been, that should been very good. We have 2 signed term sheets at the moment, when fairly advanced stages of listing with our syndicate partners.
Got it.
So I think in the first 6 months we'll do 2 deals, and if we continue to maintain that run rate, I think we'll be in the market. We would have done maybe 3 or 4 deals. So typically, a single GP fund should not do more than 3 or 4 deals,
Got
because
it.
you already have a portfolio of about 12 deals to kind of focus on.
Got it. Got it. Got it. So Bhavish, whenever you are meeting any founder and they are coming to you with the like with their product, with their idea, or like with some MVPs. So like how you define what's the great product? Just because in the SaaS there are various things are going on. So like what's your definition of the good product when you are looking for anything
Yeah.
for
So
the
I think,
investor?
so I don't know whether I can pinpoint in terms of an answer, but having been at Gartner for so many years
Okay.
and seen a lot of product founders from such close quarters, seeing how the markets have evolved. So I think I have some sort of a mental model.
Okay.
Okay. And that mental model is basically, comprises 2 or 3 things. One
Okay.
is, I look at the quality of product thinking.
Okay.
Does the founder has have unique insights into the vertical in which they are building a product? Is there something very unique? So I'll give you an example. We were doing a project and portfolio management transaction recently, PPM software.
Okay.
Now, this is a heavily concentrated industry, and you have the likes of Oracle Primavera, who have probably around $1 billion run rate now. And you've also had some spectacular flameouts like Katera, where SoftBank had also invested. And you have listed entities like Procora. Okay.
Okay.
So in this construction tech PPM, it's a very interesting market, and you would typically think with this kind of consolidation that there is no play.
Okay.
But we saw this founder. He had come with a real estate background. He had also come with a retail store background, where he
Okay.
was actually building out retail stores in the maybe in the range of like a couple of double-digit numbers every month, because store build-outs were happening. So think of Domino's setting up new branches,
Okay.
right? So he paired both of these insights, one as a buyer of these services, and
Okay.
second his real estate background. So
Okay.
he possessed real insights, and when we started questioning him in terms of, how is your ICP different from that product? How are you going to compete? Vertical SaaS has a multi-product theory.
Yeah.
Will you get into payments? Will you get into marketplace? Will you get into sourcing? So, he had a defined roadmap for that. So we look for unique insights. The reason why we look for that is because fundamentally, for your go-to-market to scale in SaaS, you need to have a good product. If
Okay.
you don't have a
Yeah.
good product, you will always be either dependent on your customer's success, or you'll be doing stitch fixes using services. And in both the cases, you are not going to be able to build a good
Got it.
product. So the quality of the product, having unique insights, and having good idea about how the go to market is going to scale. These things are critical for us as part of the evaluation.
Got it. Got it. So like as there are lots of product are building inside India regarding SaaS side. So like there are lots of Indian people they are building SaaS, but more are going towards the AI productivity tools, and more are going towards the infra SaaS. So like as per your point of view, which is the subsector or vertical in the SaaS that excites audience traction, apart from that investor is interested in that part? So what's your take on this thing?
So I think I have not done any infra SaaS, and I think partly the problem is, one, I myself don't have a lot of strong software infra background. I've been a software apps guy.
Okay.
Um, uh, So if I were to run a deal in the software infra side, I would say I would need to have like a $50 million kind of a fund, because these companies in the infra side probably require $1 or $2 million just at the seed stage or at the pre-seed stage.
Got it. Got
The
it.
second thing is, a lot of the infra projects today in the software side come out of university research, which then gets converted into an open source or an Apache top level project.
Yeah.
So
Agreed.
it's a combination of that research ecosystem connectivity plus having the ability to build a community. Then a lot of these companies have been able to build a lot of monetization layers on top of that. So these are three very different types of skill sets.
Got it.
You almost need an uber geek who has the ability to build a community and also being able to commercialize by
Exactly.
building bells and whistles on top.
Yeah.
So I think a Stellaris in India, Axel in India, or a Peak 15 in India, they have that kind of mobilization of money and understanding where they can do.
For
Somebody
infra.
like me who has like a 20 crore fund or with more than half of that already deployed has none of that ability.
Okay.
Part of the
So
reason why,
yeah.
just one last thought,
Sure. Sure. Sure.
part of the reason also why a lot of the software apps, software investors are gunning towards infra is that if you get lucky with infra, you will be able to build competitive advantage compared to SaaS.
Got it.
Software apps can get commoditized very fast. Infra, if it gets the support from community, then the chances of it becoming bigger. Outlier effect, but yeah, the chance it can become really big.
Got
Yeah,
it.
look at Postman as an example in it coming
Yeah.
out of
Yeah.
it.
Yeah.
But there's only one Postman at the end of the day.
Yes. Yes.
But if you understand the dynamics and if you were an early stage investor in Postman, hats off to you, because you were able to predict something not a normal VC would be able to.
Got it.
Right
Got it.
now, the flip side of that is Freshworks, which is more of a software infra, but it was designed to be a loss leader. They were competing not on innovation; they were competing on price.
Exactly. Yeah. So like apart from the, like we get the good understanding about the infra SaaS, but like for the micro VC firms when they are doing investment in the software side, so what was their like when they are going for the SaaS, what was their side, the vertical SaaS or the AI productivity tool? Just because these days the boom of AI productivity tool came and lots of people are building in the AI on the top of one layer of chat gpt or anything they are building, and like it's like a micro SaaS they are building, and they start with some bootstrap funds, and then they launch in product hunt and some of the gtm platforms. They get some initial traction and they went for funding. So like in that side, like what kind of trend you are seeing in the market, where this market is going in India?
Yeah, so I've known several products which have gone to maybe like $500,000 on product hunt,
Okay.
and because they have $500,000, their expectation on valuations is 5 or 6 million or 10 million.
Okay.
Now, I personally, as an investor, find it very hard to ascribe those kind of valuations to them, because the community is owned by. There are two reasons for that. One, you have permanently given the rights to your software to one. So let's say listing on AppSumo, you've given a what should have been a recurring pipeline of revenue for you. You've given a one-time license on one-time payment for perpetual use, right?
Yeah.
So
Yeah.
unless you have a higher end product or you have a different SKU, your ability to cross sell or upsell is gone. Secondly, while I understand you have the ability to launch on Product Hunt and AppSumo and Engage and it's a community,
Yeah.
it is still not a valid go to market. It's a valid go to market as a use case. So unless you can demonstrate to me that that was a way to launch there, and then it was a product validation, not a distribution validation,
Got it.
I'm willing to then invest maybe $1 million and then say, okay, let's find you more. And I've seen companies, right? One of my LPs started for 500K on I think AppSumo, probably now has a $8-10 million ARR kind of. But these stories are very rare. Most of these get remained in. Uh, I jokingly say that some SaaS investors are now getting into the real estate model. They have 5 or 6 customers. They have 40-50K coming out net of all costs. Becomes a comfortable recurring set of revenue which they are taking home. It's like a rental income. There's no growth. This will start take for a couple of years until somebody brings a better product, and then you get crushed because you didn't have money to innovate, you didn't have margins to innovate, or you have too much technical debt.
Got it. Got it. So, there are in software market, the cultural shift is always is in 9 months, new cultural shift will came in the market, and as you are a software investor, so in your investment thesis, when you have to change your you have to make do any kind of advancement in your so how you predict the market and what was your process to gain that kind of understanding, so you will shift yeah, this will be the software thing that will came in the market, and if we can invest in that thing.
Yeah, so I think my learning, one of rather it is this has been an unlearning. Just because you are on the Gartner hype cycle or McKinsey is talking about you doesn't mean it's a good investing decision.
Okay.
I've invested in a lot of very interesting tech companies which are doing very innovative work, critical work, but they have lacked market leading adoption, right? So there is no direct correlation between what consulting firms are talking about, or even for that matter, even CIOs are talking about. There is no direct correlation to whether that will lead to a purchase order. So my thinking has always been, from my current fund on the 10 or 12 investments, at that I almost like go back and read my investment memos at the time of investing. What did I see and whether that has panned? And increasingly I've realized the ones I bet on, they haven't performed as well as I had. So the only thing you can do is, based on the power law, you can only build a spread or a portfolio of companies. That's the only thing in your hand. You can decide how much to invest based on the money available, how much you want for pro rata allocation, how much you want for maintaining your to stop your dilution from happening. Those are the only things in your hand, and you can guide. But those are the only things you can do. Rest, none of the other things are in your control.
Got it. Got it. Okay. So, you are based out of Chandigarh, right? And your fund is totally operating from Chandigarh right now. So, as there are this cultural shift is also happening to city like Chandigarh, Indore, and some more cities. So, when any founder is coming from these cities, what was the differentiation in between the founder mindset when they are coming from these kind of cities and when they are coming from cities like Bangalore, Hyderabad, Delhi? So, just because there are founders coming from city like Indore and Chandigarh, they are building a business and they are running it for years, but when we are seeing the trend in the companies coming from Bangalore, in 2 to 3 years, either they will be a part of M&A, or some another thing happen with them, they shut it down. So what do you think about this thing, and what's your experience on that part?
So I think even in my portfolio, all this is tend to generalize. I'm sure there are amazing set of founders who are commercially minded even in Bangalore. But yeah, I think one cultural difference I see even in my portfolio, the Bangalore ones are more innovative on the product and thinking about the market and being able to adopt good engineering practices. The ones in Delhi tend to be more business oriented. And for a VC like me, it's very hard to balance out these two. But ultimately, I've realized one thing, that I personally get drawn to the more revenue centric founders than more of the product centric founders. It's just a mental block at my end, to be honest. Yeah. But I think we tend to generalize. But yeah, the Bangalore has some terrific set of founders. We've tried to give them term sheets or get them to accept our term sheets. Some have accepted, some have not. Yeah.
So this is one thing. Apart from that, when you are doing your investment operations, at that time, there are lots of manual processes there. So is there any intervention of AI that came to your operations or in your thesis where AI will took a big part in last 6 months? Any this thing
Yeah.
happened?
I mean, we did a lot of reasonably decent AI companies. As early as 3 or 4 years ago, right? We did
Okay.
Retro in conversational AI. We did Intense Mobi in the geospatial analytics space. We did Botman in the invalid traffic prevention space. Interestingly, I think what has happened is we've seen that the applied AI companies who focused on the conversational AI side, where the voice bots become the new user experience layer. I think those are the ones which have done good. So I think what in the application AI market, I think the market is basically divided between two or three. You either have the agentic type of workflow kind of companies who are building the agentic side, and then there are conversational AI players who are either building speech or voice bots or agent coaching kind of infrastructure. I think that's where or voice avatars. So these are the kind of companies. So, but I think voice has been an interesting space in India. We've seen some terrific amount of talent there. Some have done really well. There's also a fair amount of M&A market there. Dub, for example, which was in Axel Atom's portfolio, they recently got acquired by Observe AI. Observe AI had funding, I think, like 100 million plus from SoftBank and a couple of other vendors. It's a interesting arena on the AI side to be in currently.
Got it. Got it. Yeah. So before moving to the next part, just for my audience understanding, I want to ask you one thing. As you told, your fund is of 20 crore, and before investing, like most of the fund you invested. So, like, can you just give some understanding about how VCs are raising from LPs, and when you have a fund size of 20 crore, if you have to raise the fund size, what you guys are doing, and how all this thing will be going on, just because lots of VC aspirants also want to understand this thing.
Yeah, I'm probably the wrong guy. I haven't really gone. In my first fund, I did go talk to a lot of wealth guys. You think about all the top wealth firms in the country.
Okay.
I found connections with all of them, and I said, and I even went to some Indian funds of funds, and I said, give me an allocation. I had my AIF registered.
Okay.
One thing I learned from them is that without a track record, and I had done a lot of advisory work, in the PEVC space, at least on the public technology market side, even PEVC side, advising a lot of these funds across the world, whether it's London, Tokyo, Singapore, US, both on the East Coast and the West Coast side. It usually did not translate to a LP writing you top dollars. And in hindsight, when I look back, I don't think the decisions was wrong. I had a very theoretical view of how investing happens. And when we over indexed on some investments and then COVID happened, we had to write those off. That's when I understood the portfolio approach. I understood what power law is, what's a barbell strategy. So I think the fundamental side, I'm still learning. Like founders have a minimum viable product. I think I say has to be a minimum viable fund. So I'm in that stage where I'm actually building a minimal viable fund.
Okay.
My ability to raise, let's say, from 20 to 100 crore or 200 crore fund is going to be reflective of two things. One, my ability to attract top tier founders who say कि यार भविष्य से ही check
Okay.
table. Okay, that's one way of looking at it. The second way I will do that is when I give my current LPs a return
Got
on
it.
the money they have invested. Although I'm in the very early stages, in the 6 to 8 years, I will get measured on what kind of a DPI, paid capital. So when I multiple over invested capital, because that's theoretical, anybody can mark. Okay, I follow the valuation guidelines of PEVC associations, but still. So I think my ability is going to be based on these two things. The LPs will see what kind of DPI I have presented and what kind of founders I'm able to attract.
Got it. Got it. So, like, what's your perspective on this VC market? Like, from last 1 year or 2 year, we are seeing lots of uh, fund like 10 crore or 20 crore and 30 crore. So, this kind of funds, we are seeing there are lots of founders who are did their successful journey. They got the good exit, so they started their own fund houses. So these are one kind of shift that came in the Indian market. There are lots of funds are rising in India. So what's your take on this cultural shift and how it is different from global VC perspective, and in that side how our Indian perspective is going on? Can we talk something about?
Yeah, so I think the market is very interesting now.
Okay.
Indian market is still hugely undercapitalized with respect to the fund sizes and what the country needs.
Okay.
Deep tech and software is a great example. So I think about a year back we did some analysis. I looked at the traction data and I said the top five Indian consumer brands, which is like the Paytm, Swiggy's, startups of the world, They had over a period of time raised about $10.2 billion, the top five consumer tech companies in India.
Okay.
Okay. And that was actually higher by 100 million than the entire software or deep tech sector had raised. Right?
Interesting.
Yeah. So now here's the problem. Piyush Goyal is saying, let's build deep tech startups.
Yeah,
He's absolutely right. But where do you get the capitalization to pull them off? So let's take deep tech. People are talking about space tech and defense tech startups.
exactly.
We don't have a military industrial complex which will buy like the US will buy. We don't have a NASA type commercial entity which will buy. ISRO maybe can buy. I mean, we've seen some, but it's still nowhere even close to that. So taking these US Canadian models and trying to bring them to India, I think is still a very far away reality.
Okay, it takes years.
Years and years of ecosystem building, and then it requires capitalization, requires research, and you need to have good research institutions which are doing fundamental research where which will help you build out the company. I think those are not there. There are one or two examples like the research park at Madras University, IIT Madras. There's T Hub. There are like very small examples of ecosystem there,
Got it.
but they're not institutionalized. World over. FITT at IIT Delhi is doing some interesting work. So there are pockets of excellence. But the good part I like is that you go to any institution, even if you go to a small city like Bathinda, and they have a very good university called Baba Farid,
Okay,
they will have an incubation cell in a tier 3 city. It's not the ICERs, the IITs, and the IIMs only who have it. I think that has percolated. And I think what the government has also done is given these grants through various educational institutes that, you have a catchment area of 10, 15, 20, 50 kilometers. Founders will come and apply. Here's the money. Just allocate and manage that as a profit. This decentralization of government schemes to do fund allocation, I think, is also a very interesting move. So these are, I think, interesting things, but there is a severe paucity for capital. Unless you are a large consumer tech, it's very.
got it. So like in last few years, consumer tech is like it's one of the booming sector. Like from the D2C end to B2C end, like from the consumer apps to consumer brands. There are lots of brand came in India. They took good funds from good VCs. They raise good capital. They are doing good branding and all that thing. And Shark Tank also boom all that thing. Apart from that, one more interesting sector what I see in the trend is health tech apart from SaaS. So, like, what your take on health tech? Just because this is one of the interesting infra that our country require in the current scenario. So, what
Yeah.
your side in this side?
So again, I've invested in health tech. I have done, a lot of advisory work on the health policy side,
Okay,
and it's a sector which is very dear to my heart.
okay,
I've served on the board of Medimetry, which was building rural footprint of OPD clinics. There are areas where for 100 kilometers you don't have a GP who can treat. There are several states. If you were to plot on a map, several districts in north, and there have been some interesting startups which have tried to fulfill that. I can think of Karma Healthcare. I can think of Clinic with a double K, Medimetry. There's several of these. There's Beto, which try to do a lot of things. I think most of these fundamentally the business models in healthcare have suffered, and I think they have suffered for a very simple reason that there is no single payer entity to underwrite the health costs. Now, Clinic is the only one which has tried to build a payer plus delivery kind of a business model in India. And I think they've been successful in the blue collar, some parts of that. But I haven't been able to see a lot of scale on the healthcare side. That's why, we tend to see not a lot of healthcare deals in India. Or the ones
got
which are
it.
there, they're more on the, I would say consumer. Vito started as a clinical management platform, eventually almost became a D2C company. Their last round was done by Flipkart because they're selling health products. Medimetry shut down because there was no ability for rural population to pay for consultations. The model is viable only. So when you look at healthcare as a business model, value is only accruing to pharma and to insurance.
Okay,
So if your basic healthcare model, a business model is not touching these two areas, or you're not reselling or selling any of these two, which touch these two sub segments, you will not have a viable business model.
Got it. But like in these days, there are lots of startup coming in the sport, sport, not sport. There are health equipment side. There are lots of Indian startups. They are building devices for checking
Yeah,
the
but
health and all the thing.
those are not health tech.
Okay,
They're consumer tech.
they are consumer tech. Okay,
If you build a tracking device like Ultra Human and you're competing with the
yeah.
same ICP as an Apple iPhone or an Apple Watch, there's nothing health about it. I mean, it is health tech, but in my definition that is consumer tech.
Okay, and yeah, and like this is the one part. That's a very generic part. As you say, it's a consumer durable, and that's the main thing. But if we can talk about some of the companies who are building product for the hospitals, so they are coming inside the health tech, and they are creating IoT based devices for respiratory devices and all that thing. So there are good companies are coming in that side. So can if you have any understanding on that side, so we can just talk about that little on that side.
Yeah, so I would say the devices side again has who is going to pay kind of a problem. Okay,
Okay.
there are some monitoring devices which critical care or geriatric patients need.
Okay,
They have limited viability in niches, but generally it's overall a hard market to track
got it.
and attract. I've seen several device companies. Some of them have interesting algorithms on how they can predict even potentially heart failure rates, and they're very innovative models. In my previous fund, we came across this very interesting company which was capturing nitrogen signals in which is usually a first predictor of. So they were able to capture those kind of early warning signals,
Got it.
but very hard to commercialize. Or they have, from a regulatory point of view, getting those devices up 2 to 3 years in the clinical side. Tough market. Our friends at W Health are doing some interesting work. They have some sense of what works in healthcare, and but otherwise I think healthcare is one area I would love to see more interesting things come out. So Gates Foundation had given a grant to Access Health, and they had built a healthcare accelerator,
Got it.
and they had some interesting companies. I've had the privilege of meeting many of them.
Got it.
So I think there's work in pockets, but healthcare investment requires, in my opinion, a healthcare commercial knowledge as well as healthcare slash medical science background.
Got it.
You almost need a Superman GP who's trained as a clinician but has the mind of a businessman,
Got
which is
it.
a very rare combination.
Okay. Got it. So, like in the health tech side, as per your point of view, which is the major part? Like, we need just because just talking as per the perspective of to raising the health tech infra of India. So, we need a good distribution, or we need a good like devices in the hospitals in the good rate. So, in the tier two, tier three cities where very few hospitals are there, in the tier three, tier four, there are few hospitals, and in that hospital there are not very big devices are there, just because if someone is opening their private clinic at start they don't have good budget. So what was the major challenge in the health tech side, the distribution part, or this tech side?
So I think on the operational technology side, there are pay-per-use equipment available even from the large manufacturers like Siemens and all. They'll give you on a per patient model, or they'll give you on a lease model. So they also understand that the days of doing capex and rather doing hardware as a service or medical devices as a service now is more viable. So they're also tuning their business models. I think that part is kind of taken care of. But the health information systems side, whether it is the billing or the EMR, EHR, PHR side, those areas are still underpenetrated. I mean, Medimetry, I was on their board for almost 2 years. They started as a disease management platform. It was beautifully built by a surgeon classmate of mine. It had all the clinical workflows. It had a drug index. It had EMR workflows. Everything was there, but very hard to sell.
So we need good understanding of entrepreneurship in our MBBS colleges also, so
Yeah,
our
again,
doctors will be
I
going to
think
be the next set of entrepreneurs in India.
I think that's a great point. Building healthcare. It might be a anchoring bias at my end that I look at everything from my experience on the health policy side as well as from my investing background. But it's I think it's one of the toughest industries in India to build.
So how government support on this side, like in the health tech side, is there a good kind of subsidy for
I
health
I
tech?
think I think I think Ayushman Bharat was a brilliant scheme apart from its challenges, right? But again, it has to evolve to a model where there has to be a payer concept there. The government cannot be a payer, no matter what you call about NHS and the Canadian info-based system, but they behave like a payer where there is a contribution from the public. There are challenges in that model. There are challenges in the Ayushman Bharat model, as we have seen in terms of bogus billing and all. At some point, India needs to figure out what that payer is going to be. Is it going to be insurance led? It's going to be government led? It's going to be contributory? Whatever that might be. But we need to figure out who is a payer in our healthcare system. Until we fix that fundamentally, we will not be able to see a system which thrives on the innovation side.
Got
We
it.
will not be able to see that.
Got it. So, like my next part is about the founder and VC fit. So, in that side, as we are talking about health tech, and I see this more challenging area. So, when any entrepreneur or any founder is coming from the health tech background, so when you are talking to them regarding the investing or the advising side, any side, so like what was the thing that you are looking for? Just because he's the person who is coming from deep health area, he knows about the human body, he knows about what is the problem he's facing and how we can solve it. Just because he see the system in the Indian villages, how and they know how to make it better, how we can make it better. And the second thing is, one founder is coming from the engineering college or MBA college, a top tech or business schools. They know about the business, they know about operation in some cases, but mostly they know about the businesses, they know how to own the PNLs. So when this kind of founders came to you, like what was your side when you started supporting them? What was the main thing that you are dealing with them?
Yeah, so I think there are a couple of permutation combinations.
Okay.
So if it's a general business guy trying to build in healthcare, I look at whether they have prior healthcare background,
Okay.
either operating in a healthcare entity or advising in a healthcare entity, or if it's a clinician, then I look whether they have had some business exposure or they
Got it.
have a partner who has a healthcare exposure. So I have seen interesting business models in healthcare, but I have not funded them because they don't have clinical expertise. I've seen a lot of clinicians trying to be on the healthcare side, but haven't been able to build some sort of a business model. So
Got it.
a combination, like I said, the combination is kind of neat. The healthcare consumer tech side, if you look at Ultra and a couple of these other models, Healthify Me, which is again a good model, those and the consumer tech gym type of model, gym aggregation kind of model. I think those have all worked. It's the core healthcare models which have not been able to thrive.
Okay. So like there is one company named Sugarfit. Everyone knows about it. So what's your take on that side? Like, just because sugar is one of the biggest problem in our country and lots of person are facing it, Sugarfit is trying to solve that one. And at that side, what's the thing going on? Just because sugar and BP is one of the biggest problem in every Indian house, any guy has that thing.
Yeah, so I think digital therapeutics, which I'm assuming Sugarfit is focused on, very tough market because you're trying to change people's behavior. It's the hardest thing to do.
Got it. Got it. Got it. Yeah.
So I think I don't know enough about Sugarfit, but my prediction would be that if they're building a B2B healthcare kind of a model, they will eventually move to a consumer tech kind of a model,
Okay. Okay.
and they will find scale in selling um, products which a lot of these people who want to be fed or are pre-diabetic or diabetic, they will buy.
So, like, just a general suggestion that I want to take from you for our whole audience. What's your advice for the founders as per the investor point of view? What thing they have to take care when they are going to raise their
Yeah.
pre-seed round?
So I think there are two things which I always tell. When you look at
Okay.
public market investing, the CEO is measured on how well he does capital allocation, right?
Okay.
Uh, that equivalent of capital allocation is how do you build runway or protect your runway. So I think that's the fundamental thing I evaluate my portfolio CEOs on.
Got it.
Capital protection, how you're building efficiency, how efficient is your growth.
Got it. Got it. Our next part is some little round that will be just a fun round, kind of rapid fire, not exact one. So, any book suggestions for founders and aspiring VCs from your side?
I think for aspiring VCs, Brad Feld's book,
Venture deals.
is I think that's the most seminal book I can think of.
Okay.
Then Poor Charlie's Almanac, again, highly recommended for the aspiring VCs. And the third, for founders as well as VCs, a couple of books come to my mind. One is Mental Models by Shane Parrish, The Art of Thinking Clearly by David Curley. I think these are the books which I kind of highly recommend, because these are fairly abstract and they can be applied across a range of domains.
Got it. Got it. Second thing is your favorite productivity tool, AI side for hacking the productivity in day to day
Yeah,
work.
so I think these days it used to be Notion, but these days it's Notebook LLM. Like,
Okay. Okay. Third thing is like any memorable investment lesson from you to fellow investors.
I would say risk management, portfolio diversification, um, barbell strategy where there are some home runs, but you take a lot of risks because you never know how those risks pan out. These are my investing principles, which I adhere to.
Got it. Got it. Before going to our last question and thing, I just want to ask like what was your vision with Modular Capital, like in for next 1 year or 2 year, that will be helping for the founders. So if anyone wants to reach out to you, they can directly.
Yeah, so I think what we focus on is, I think our secret sauce compared to a lot of other funds is that we look at a product and, given my advisory background, I'll be able to predict or being able to coach or advise them on where I think the market is going to be. Go to market is the biggest value.
Got it. Got it. Got it. Yeah, so Bhavish, that's a wrap for today. It's a great connection with you, and we discussed a lot about health tech and about the venture capital, how the fund works, and all that thing. Looking forward to connect with you for another time for some another topic.
Yes, thank you. Thank you, Shubham, for inviting me. It's a pleasure.
Thank you.
Have a good day.